Peter Rashan here with another Financial Safari update for those of you that like to keep up with the nation's financial news and what's going on. Update here from Yahoo Finance. Regulators shut down 6 banks in Georgia and 1 in New York State, and this brings the total to the number of 64 U.S. bank failures for this year. And they normally slip this news out, as you can see here, on Fridays, late in the day, so that the wind does not break in the news media, so to speak, and the stories kind of get put on the back burner by Monday. But again, 64 banks so far this year have been shut down, and those are federally insured FDIC banks. Regulators on Friday shut 6 banks in Georgia and a small bank in New York State, raising to 64 the number of federally insured banks to fail this year. Federal Deposit Insurance Corp., the FDIC, was appointed receiver of the banks. 6 bank subsidiaries of Security Bank Corp., based in Macon, Georgia, and Waterford Village Bank of Clarence, New York. The 6 security banks had a total assets of $2.8 billion and deposits of $2.4 billion as of March 31st. State Bank and Trust Co., based in Pinehurst, Georgia, has agreed to assume all of the bank's deposits and $2.4 billion of the assets, the FDIC said. In addition, the FDIC and State Bank and Trust signed an agreement to share losses on around $1.7 billion of the 6 banks' assets. Evans Bank, based in Angola, New York, will assume all the assets and deposits of Waterford Village Bank, said to have $61.4 million in assets and $58 million in deposits as of March 31st, again, the end of the first quarter. Its single office in Clarence will reopen Monday as a branch of Evans Bank. Also, the FDIC and Evans Bank agreed to share losses on about $56 million of the failed bank's assets. So this is going to basically just open up as a new branch of a different bank Monday morning, and all of the account holders probably will just have a new sign greeting them when they go to their bank Monday morning. With the latest closings, 16 Georgia banks have failed so far this year, more than any other state in the nation. So hitting the southeast a little hard there, especially Georgia. Most of the failures have involved banks in the Atlanta area. It is a banking capital, and a lot of loans out of there, I guess, the subprime mortgage mess, where the collapse of the real estate market brought economic dislocation. So a lot of folks defaulting on those loans. The 64 bank failures nationwide this year compare with 25 last year and 3 in 2007. That is a scary statistic. 64 bank failures nationwide this year compare with 25 last year and 3 in 2007. The 6 security banks had a total of 20 branches, which will reopen during normal business hours starting Saturday as branches of the State Bank and Trust, the FDIC said. They are Security Bank of Bibbs County, based in Macon, Security Bank of Houston County, based in Perry, Security Bank of Jones County, based in Gary, Security Bank of Gwinnett County, Security Bank of North Metro, based in Woodstock, and Security Bank of North Fulton, based in Alpharetta. The FDIC estimates that the cost of the deposit insurance fund from the failure of the 6 banks will be $807 million. The FDIC estimates that the cost of the deposit insurance fund to the deposit insurance fund from the failure of the 6 security banks will be $807 million. The Waterford Bank, the cost to the fund will be about $5.6 million. As the economy has soured with unemployment rising, home prices tumbling, and loan defaults soaring, bank failures have cascaded and sapped billions out of the Deposit Insurance Fund, the FDIC. It now stands at its lowest level since 1993. $13 billion as of the first quarter are the reserves of the FDIC. While the losses on the home mortgages may be leveling off, delinquencies on commercial real estate loans remain a hot spot of potential trouble, FDIC officials say. Again, commercial real estate loans remain a hot spot of trouble. If the recession deepens, defaults on the high-risk loans could spike. Many regional banks hold large numbers of them. And these are folks who, want to get the local economy going. They're loaning out to commercial real estate folks who are now going out of business, defaulting on their loan. The Treasury Department has launched a program in which financial firms will buy as much as $40 billion worth of banks' soured mortgage-linked investments. That amount is far below the potential $1 trillion in assets that the government originally hoped to take off the bank's books through the program, and another that would have targeted bad loans. The problem assets helped spark the financial crisis as they lost value and banks became unable to sell them. They have been weighing down banks' balance sheets. One reason the industry has had trouble providing the credit necessary to support an economic recovery. The number of banks on the FDIC's list of problem institutions leaped to 305 in the first quarter. Problem institutions, the highest number since 1994 during the savings and loan crisis, from 252 in the fourth quarter. The FDIC expects U.S. bank failures to cost the insurance fund around $70 billion through 2013. Again, as of now, $13 billion in reserves for the FDIC as of the first quarter, and the FDIC expects U.S. bank failures alone to cost the insurance fund around $70 billion through the next 4 years. May closing of struggling Florida Thrift Bank United FSB is expected to cost the insurance fund $4.9 billion. Again, out of 13. The second largest hit since the financial crisis began. The costliest was July 2008 seizure of big California lender Indy Mac Bank, on which the insurance fund is estimated to have lost $10.7 billion. The largest U.S. bank failure ever also came last year. Seattle-based thrift Washington Mutual, Inc. fell in September with about $307 billion in assets. It was acquired by J.P. Morgan Chase & Co. for $1.9 billion in a deal brokered by the FDIC. $3.7 billion in assets acquired for $1.9 billion in a deal brokered by the FDIC. Associated Press story found on Yahoo Finance. Peter Rashan reporting with the Financial Safari. Just a financial update for those out there who are interested.